All right, ladies and gentlemen, let's get to the charts. Thank you for joining me for another episode of All in Society. So we're going to break down today, we're going to break down two charts. We're going to take a look at this SMH trade that I made and gold trade. First, let me put some light on. All right, so you'll see here, hopefully you guys can see it pretty well. This is SMH. And so on the far left, you see this arrow here with my cursor here. This is where we entered the trade. It was right around $390 a share. So if you're not familiar, SMH is a ETF that covers the semiconductor companies. The two top holdings where a majority of the funds are allocated in that fund is in Taiwan Semiconductor and NVIDIA. By now, you're probably already familiar with NVIDIA. They supply those super powerful chips, those GPUs. And then tied with that, what I wanted to do, I want to trade NVIDIA and TSM. And TSM is the manufacturer of those chips. They create all those powerful chips, and they really have a monopoly, have a chokehold on that market. No one quite does it like Taiwan Semiconductor does. And this trade, you see this first arrow, I entered this in January 12th. And I want to say this trade was really geared towards the new information about China going to allow NVIDIA to sell those a little bit more powerful chips, those H200 chips, over to China to select customers. And so I really wanted to take advantage of what I thought was positive news for NVIDIA. Those chip sales are not baked into any of the analyst projections back then, because NVIDIA was essentially cut off to selling chips over to China. Now, we did get new information today, which is definitely relevant, because China is going to restrict even further who was allowed to get those chips. I think it's going to be companies that are really doing it for research, and I can't remember the other reason, maybe some type of infrastructure reasons. Don't quote me on the last one, but I know the first one was definitely on research. So with that being said, I entered this trade around $390 a share in SMH, and I exited in this area right here on right this morning. And the reason why I exited, we can zoom out a little bit more. Go for like a month out. Actually, let's go 3 months out, and we'll look at the daily chart, so you really get an idea. So you can see there's really, we were in all-time highs. And so when we're looking at all-time highs, you want to think when it hits an all-time high, usually those are kind of psychological targets for people to start selling. They're starting to take profits. It hits a new high. It's just natural. You start taking profits along that time. And so I'm very conscious of that. Especially in the past, I was invested in Google. I had Google options, and it would hit the top, which is considered supply zone. Okay, there's more supply, there's more shares coming into the market because people decide to sell. Okay, and I will let it hit that supply zone, and then would fall back down. A lot of times those contracts will be up like 20% or so, and then they fall right back down to even, and to break even. And that's kind of productive. If I'm going to invest in something, I want to be able to sell at the top. I can always get back in at a later date. So a lot of times I maybe have just one or two contracts, and it's nice if you have two contracts, you can sell one and just let the other one ride. But in that case, in the Google example, I only had one contract, so I sold it. So from learning from my lessons from previous contracts, I said, all right, well, let's look at it a little bit more. So we'll zoom in, we'll go to the hour chart, and we'll take it into a week, and so we can see it a little bit more. And so previously, the high was right around here, okay? in this area where my cursor is. And so I knew once it opened aggressively above that previous high, it was more than likely going to sell off, and that's exactly what it did. And so I sold kind of in the middle here. And unfortunately, I decided to run up a little bit more until it fell back down later in the day towards the close. And just as much as up here, this is considered a supply zone. See, it comes up here and then it drops aggressively. You see that red bar right next to this strong green bar. What it shares rose up, hit a new high, and then aggressively dropped because people started to sell. Same thing happens down here where sometimes you get a demand zone and that previous low now kind of acts as a support level and it bounces off of that. And that's exactly what it did. It went down aggressively, then bounced right back up that next morning. And then you saw it come back down here again and bounce right back up because shares opened here. Oh, there goes my light. Shares opened here, they went higher, and then they pushed back down, pushed down back to this level and bounced right back up and closed. Okay, so you just got to be mindful. You want to watch those supply zones and those demand zones. And if you want to get a little bit better at that, or if you want help identifying those, you can definitely join our Patreon. It is available. It's $50 per month. We will love to have you. Put in a lot of news in there, a lot of knowledge. I'll show you the indicators that I use, and most importantly, I'll show you how to build an AI trade agent for you to help you identify these supply and demand zones and help you get in and out of your options contracts, and it can also help you with your long-term investing as well. All right, so that is SMH. Now I want to get to the gold contract. Now the gold contract, I did a little bit better. We had a profit about just over 650 bucks. That SMH option, we only profited about $200. I think 201 to be exact. All right, so let's look here. So we're zoomed out a little bit. So for this trade, we entered right around here when shares were around $409 a share in GLD, and we exited when shares were about 422, just above $420. Okay, so a nice little run that we took part of here. Okay, so the reason why we jumped into this one, this was early January 5th. So I'm watching the news and just listen to everything that's going on. Trump is, I think this is right around the time we get the news, Venezuela, and I know I just butchered that, over the weekend. I believe the Sunday the news came out that Trump was attacking Venezuela. And I knew Monday morning that gold was going to spike. Actually, I don't know. Looks like January 5th. It's around that time, but I don't know if that was exactly the date. We can take a look at it real quick. Yep, that's what happened. So January 2nd was right around here over the weekend. Monday opened much higher on the news. Gold spiked. And I think I got in January 5th just to confirm that this wasn't going to sell off, because I thought maybe we were hitting supply zone and it was going to dip back down. It didn't dip back down, a little bit higher, and it wasn't oversold, so I decided to jump in and ride the wave, and I did so successfully. All right, we can zoom in a little bit more so you guys can see. And you see up here, right in this area, we completely jumped that supply zone from January 9th to January 12th. Completely just demolished it and just pushed higher. But up here, I was watching, and I said, all right, if it reaches back down here, which was previous support. I said, I'm going to get out of here because I don't want it to test support and then start tanking back down into this area. So it got back down here and you saw this chart, it dipped and then it did bounce right back up. But I think before it even dipped down that far, I exited this trade because I did not want to play with whether or not it was going to test that support zone or not. So I exited the trade and we took some profits there. And you can see today, gold is starting to fall further. And I actually put in a put for gold to because I think it's going to fall a little bit further than it is now, maybe down to this 415 area before it bounces back up. So those are really the trades. Like maybe 418 they'll get to a test and see what happens there, because that was a previous supply zone. That previous supply zone here will probably act as support. But we'll see if it tests that support and bounces back up, or if it continues to go a little bit lower back down to this 415 area. So that's pretty much the breakdown of those two. Again, if you want to jump in and see exactly what indicators that I'm using to identify my trades, where we have momentum or not, or if you just want to get a full understanding of my strategy and what I'm using, definitely jump in the Patreon. And if you're not willing to pay the $50 a month, I understand that, then you can join for free. I put a lot of free information in the Patreon as well, just like this video. So hope you enjoyed this video. Hope you guys got something out of it. I will see you in the next one.